The crisis is everywhere in Europe. Besides whole economies going bust, there's been a slew of banks needing bailouts, regional and city governments going broke, homeowners being kicked out, and the ranks of the unemployed just keep growing. Can it get any worse? I don't know. Let's see if we can find out. Welcome to Made in Germany. I'm Ben Fazulin. Today on the show, we've got an economic expert lined up for you who's also known as Germany's crisis prophet. We'll also be covering these topics. How low can it go? Spaniards say they've been robbed of their wages and their siesta. Boardroom Comfort, a southern German firm furnishing the globe's business elite. And quality control, the people in charge of guaranteeing the organic in organic food. The pain in Spain has entered an entirely new dimension for Spaniards. That legendary long lunch with a little nap is destined for the chopping block. As of September, shops all over the country will be allowed to keep their doors open all day in the hope of making more money. It's what the country as a whole needs. The economy has shrunk again. That's 3 quarters in a row. The credit crunch is tightening. Spanish banks and provinces are running to the state for help. And on the financial markets, borrowing money has never been so expensive in this era of the euro. It's all a massive catch-22.
This is a hold-up, the demonstrators are chanting. The government wants to cut their pay, and they call it robbery. Public service workers in Madrid are on strike. Financial market analyst Alberto Roldan works around the corner. He values stocks for insurance companies and banks. Many of his customers have lost confidence in investments. He says he can no longer predict how his business will develop.
What'll happen? It's impossible to answer that question. Maybe we'll have it under control in the coming weeks, or maybe the end of the year. But at the moment, it's very hard for stocks and markets to find an answer.
His workplace is just 5 minutes from the Madrid Stock Exchange. On the way there, he passes by buildings that date back to grander times. They represent periods of rapid development in 19th century Spain. The old stock exchange dates from then too. But those times of great wealth in Madrid are over.
Fear is the main thing. We're not worried about things losing their financial value so much as we are of losing the things themselves, our positions, losing our house, our car, and our social security. That's the widespread fear in Spanish society now.
The visit to the old exchange is a nostalgic one for Alberto Roldan. There's no trading going on here on the floor anymore. Although there are monitors showing the share prices, the deals are made electronically and behind closed doors. The Spanish stock index lost more than 40% of its value last year. Media reports that Angela Merkel and Eurogroup President Jean-Claude Juncker want to support Spain did buoy up the market a bit.
What does that mean? Last week we got good news from the EU. The news that Spain will get help was still being reported after the weekend. Statements from Juncker and Germany have helped Spain's economy. Those are all reports that have a positive effect on the market.
The picture looks different next door in Café Siguero. People here are preoccupied with the crisis.
I'm a taxi driver in Madrid, and the crisis has hit us hard. Since 2008, we've really noticed the number of fares going down. It's really hit us hard.
Your friends and the people around you are having a hard time. People are out of work.
You see a lot of stores going out of business, but I'm optimistic. I keep on working and hoping things will look up.
That's how Alberto Roldan sees things too. He firmly believes Spain will have overcome the crisis in 5 years.
Now to a man who's made it his job forecasting crises. Let's see if he can forecast his way out of one. Economic analyst Max Otter, thank you very much for joining us. What do you think lies ahead, first of all, for Spain?
I think the pain is going to continue for 2 or 3 years because too many actors have an interest in this European crisis. Too many actors earn money on it, and nobody has really the power to solve it at this point. So it will drag on. That's my only prediction I can make for 2 or 3 years.
You've said this isn't the end of the world, but certainly it is for many Spaniards who've lost their homes, lost their jobs. What's the situation like for them?
It's pretty terrible. And when we heard somebody was saying the fear is going round, I mean, with 50% youth unemployment, 20% unemployment, this is terrible, this is horrible. And if you have markets overreacting, I mean, Spain is not in good shape, but the interest premium is too high. And then at the same time, you have a very restrictive fiscal policy. Of course, you're pushing the country deeper into crisis, and that's what's happening right now.
You mentioned before there are people profiting. We've gone through all of the people who are losing out in this crisis. Who are the ones profiting?
Well, for example, stock investors, if they have the stamina and power to wait for a couple of years, if they buy Spanish shares on the cheap, I mean, they'll make a killing. They just have to take the time. I mean, it's a solid economy after all.
In Spain, mortgage loans are twice as expensive. In Finland, for example, even borrowing for the government is right up there, as you mentioned before. If we check out the interest Madrid has to pay on 10-year bonds, there hasn't been any respite in years. 7% is a lot to pay when you're talking loans worth billions of euros. The cost for the German government is very different. How can you explain that? Is it a level playing field?
Not at all, and financial markets are highly irrational. That's my basic premise, and that's what behavioral finance would also tell. And Germany is not that good that we only have to pay 1.5%. I mean, there's problems too, and Spain is not that bad. So the spread right now is reflecting panic. So Spain is effectively overpaying.
OK, we'll get to some of the problems facing Germany in a second. What about the latest talk from the European Central Bank sinking its teeth into this crisis and the measures people are talking about?
I think it's the last recourse we have. I mean, it's not really in line with the German constitution, but the ECB can do that, and I think it will, if push comes to shove, to avoid the worst.
Do what? Quantitative easing?
Quantitative easing, buy more bonds and so on. I think that path will be taken.
What about a limitless Euro rescue fund?
I think that's a bad idea because it really would stop structural adjustment. I mean, if we break the rules every once in a while, that may be unavoidable, but the limitless rescue fund would really distort incentives.
OK, we'll get back to you in a minute, Mr. Otter. First of all, a closer look at the banks. In Spain, they've run out of money, and a lot of them wouldn't even exist anymore if it weren't for state aid. Too big to fail was the call cry from so many analysts. But is there such a thing? Nearly 4 years after being set up, the German Sofin Bank Rescue Fund is still propping up the financial industry here. But why shouldn't ailing banks be allowed to fail and maybe even learn from their lessons? Here's a top executive who knows his way around the system and has been speaking out on what he thinks needs to be changed in the banking sector.
This is the previous version of Germany's banking law. The current edition is this big. The latest commentary on the legislation is 2,400 pages long.
Bernd Lucia headed a major German bank until he retired 7 years ago. The time was right, he says, because the banking law was becoming ridiculously complex. He says it made oversight nearly impossible.
As the law grows more comprehensive and detailed, the opportunities to exploit the loopholes increase.
Lucia says the law is now virtually unusable for financial regulators. He'd like to see it reduced to 1/10 of its size. In his experience, as the legislation swelled, so did bank balance sheets. Suddenly, financial institutions all seemed to be making strange deals that, to him, were dark omens of the coming financial crisis. Back then, derivatives were among the speculative instruments seen as the miracle weapons from New York or London, especially London. British banks seemed to be raking in profits everywhere. Lucia recalls that German politicians wanted the country's banks to show more British verve. The banking sector thought that risks could be contained with the help of formulas.
The consequence of the use of mathematics in risk management was that they thought it was actually possible, with the help of mathematics, to reduce risk in banking to zero.
Auf null zu minimieren.
The traditional hectic traders who dealt in real companies with real value were becoming scarcer and scarcer. Everyone was spellbound by the belief that money could multiply on its own.
Weil bei den Derivaten
With derivatives, you took on very little risk. The sums were unimaginable, but that was balanced by low risks, so it was a great deal. Above all, the banks earned their money on fees.
Lutje says there's no such thing as a bank that's too big to fail. He admits the collapse of Lehman Brothers in 2008 kicked off the crisis, but only because bankers then realized how much junk they had on their books and could no longer trust each other. That's why Lutje adheres to this firm principle.
Die Insolvenz gehört.
Insolvency is just as much a part of banking as founding a bank is. The negative effects of a bank's insolvency can be averted for other banks.
Für andere Banken aufgefangen werden.
Central banks can intervene to ensure that funds continue to flow. Worldwide, there are 29 banks defined as key players in the sector. 2 of them are German. In all cases, the main problem is that their own reserves of capital are too low in relation to their volume of investment. The Commerzbank fell victim to this and was essentially nationalized in 2009. And Germany's #1 bank, Deutsche Bank, isn't holding enough reserves either. Lutje says there's only one way to resolve that.
I'd separate the banks. The banks that want to speculate, fine, let them speculate. And everyone should know they could go broke at any time.
For Lutje, the drop in credit ratings of many countries comes as no surprise. That's what happens when states step in to rescue what are effectively gambling casinos.
It's all a gamble, but is that the type of business that our government should be supporting? That's another question for our studio guest, Max Otter. What do you think?
It's really an outrage. Maybe we had to do it in 2008, but that we have not done anything since then, anything significant to change that, except maybe the Volcker rule in the US. That is really an outrage.
What does that involve exactly?
That is a part of a separation of investment banking and regular commercial banking.
On that topic, does it make that much of a difference separating an investment arm from a bank?
Oh, yes, it does, because then the investment bank cannot speculate with savings deposits, and that's what we did after 1929, and it has served us well way into the 70s, and only since the late 70s have we refused those businesses, and we should separate them again.
How should these big guys actually be regulated to ensure they don't get to the point that they go bankrupt?
Good regulation is short, as we heard in the magazine. So the laws should be short. Foremost, there should be sufficient capital. Deutsche Bank has below 2%. So 7-8% real capital in every banking institution would be a good idea.
Just to look ahead quickly, we're seeing moves towards a fiscal union here in Europe. Are we going to see a United States of Europe?
I would dearly hope so, but we're far from it, and I don't see any moves toward that. We would have to start with a constitution, with democratic institutions and so on and so forth, and we would have to really start afresh.
And is that why we've got so much uncertainty at the moment and why this is dragging on? Because it is such a mammoth task.
Yes, it is. I mean, Europe is not politically unified, and I don't see it coming anytime soon.
Okay. Mr. Otter, pleasure having you here in our studios in Berlin. Thank you very much. Now for your chance to have your say. We'd like to know what your thoughts are on this one. Should banks be saved at all costs? Let us know what your opinion is by going to our website. That's dw.de/English/Made in Germany, all one word. Fill out the online questionnaire and you'll automatically qualify for our next draw. With a bit of luck, you could win one of our DVDs with our best reports on German family businesses. As always, we look forward to hearing from you. Last week, we wanted to know how much of a break you take from work each week to exercise and keep your body, not just your mind, in shape. Well, Farhan Munib wrote in from Oman saying that sport is essential for a healthy life, but that there are some sports that have become such big business that they're only reserved for the rich. However, you can still walk and jog for free, as he points out. Well, furniture by Valta Knoll turns up all over the world, from the stock exchange in Kuwait and skyscrapers of Shanghai to the VIP lounges of Berlin. This family business from southwest Germany has succeeded in hitting just the right note internationally. Well-known designers like Sir Norman Foster provide the ideas, while tailors and upholsterers from Germany ensure the quality.
Herrenberg is a quiet, ordinary small town in southern Germany. You might not expect to find a world-renowned furniture maker here, but this is where Valta Knoll has its HQ. The company is famous for classic chairs like these. Managing director Markus Benz says good design is always sought after.
This is my favorite piece. It's a design from 1967, and it displays timeless elegance. It's very fine, very slim, and beautiful. It shows that if something has been designed well in the first place, its beauty will endure.
The CEO has hopes that in time, this chair will become a classic too. He commissioned an Austrian team to design it. It took 3 years to transform the earliest drafts into a functional product for everyday use.
Craftsmanship takes time and demands attention to detail. If you're an impatient person, it's not for you.
Now the Atelier chair is ready to go on sale. The price? €3,500.
What I really like about this product is its entirely minimalist approach. It consists only of a chrome-plated tube and a sheath of leather pulled over the tube.
Leather is especially popular with Valta Knoll clients. In its storeroom, the company has €1.5 million worth of leather. Valta Knoll chairs and sofas are made of leather from southern German oxen, reputedly the best. The hides are around 5 square meters in size and thick. The quality control picks up every flaw, even mosquito bites.
Ultimately, the animal's life is mirrored on the hide, even if it's said to be thick-skinned. And we have to take note of all these little marks so they don't show up on the seating space.
The aim is to get the largest, most flawless piece of leather possible by marking all the unwanted spots. Then templates are projected onto the leather using lasers, so as to fit inside the highlighted areas. A machine does the rest.
If you want to make top-quality products, you not only need the best manual skills, but also modern technology. It's only when you combine the most modern technology and a special quality of craftsmanship that you produce a new level of quality.
And clients want that quality outside private homes too. 2/3 of the company's sales are with furniture for hotel foyers, VIP lounges, conference rooms or executive offices. It's a very lucrative sector because most companies are happy to spend big money on their image. For example, this desk, equipped with all kinds of technical gadgetry, is one of the company's biggest sellers, especially in Asia. And that's despite its €25,000 price tag.
This is another product that works well in all cultures. Most of all, it has something to do with the lifestyle of the owner. Of course, it's a statement by the boss who's reinforcing his position with it.
Knoll doesn't only cater to super bosses, though. The company furnishes hundreds of executive offices a year. But when it comes to saying who has which desk, they're tight-lipped.
Discretion is our business.
Valta Knoll's success is no secret, though. Classic design and meticulous handcrafted work has made the town of Herrenberg home to a world-famous brand. And everyone is welcome to see that.
Can't really do much with a little table like this one, can you? Now, this may be something you've asked yourself before. Just how organic is the organic food that you pay so much more for at your supermarket or local store? The European Union imposes strict rules on farmers and food producers, and this next report introduces you to some of the people who make sure those rules are strictly adhered to. The German company BCS Ökogarantie specialises in certifying organic food and has inspectors all over the world. Among them, an agricultural engineer from South America who took the opportunity to have a look at how his German colleagues go over some farms with a fine-tooth comb. And on at least one farm, he discovered some rather unusual work practices.
David Flores has never seen anything like it. Bavarian harvesters are lying on the platform of their wagon as it rolls on. They're picking organically farmed cucumbers. Flores comes from Ecuador. He's a certifier of organic products, and he's on a short visit to Germany to take a closer look at some of the country's organic farms.
It seems very efficient and quick to me. And the personnel don't have to exert themselves like they would if they were loading baskets. It seems very practical.
This is his German colleague. Both work for the same organic certification inspection firm. Whether in Ecuador or Germany, they spend a lot of time traveling to establishments like this organic farm outside Munich. Oliver Koch takes his job seriously, taking the time to inspect every vegetable patch. But what's he looking for?
Basically, plant diversity, whether there are any signs of possible non-allowed methods, how the soil looks, how the plants have developed, and simply whatever you can see down here that doesn't catch your eye at first glance.
David Flores inspects farms in the same way back home, although most of the organic products there are exported.
We're slowly starting to accept organic products and consume them. So I think it's a process of understanding which advantages this kind of food can bring. Hopefully it won't take too long. The biggest problem in Latin America is the use and misuse of insecticides and pesticides and other chemical substances.
The next stop on the inspector's itinerary is organic brewery Neumarkter Lamsbräu near Nuremberg. Flores is shown around by a specialist of the trade. It's new territory for the Ecuadorian inspector who's never been inside a brewery. His German colleague carefully inspects the contents of the stockrooms.
Okay.
Is this where all the hops are stored?
It turns out they have another stockroom in the building and 5 kilograms of hops. Each inspection has to include a tour of the premises to make sure that organic really means organic. But what happens if something's not up to scratch?
There's a series of measures. They range from pointing out the problem orally or in writing to warnings, or in worse cases, they can lead to a ban on sales.
In order to prevent that from happening, Manfred Böhm checks all bills and receipts. The visitor can't join in the discussion, which is in German, but he's also no stranger to this kind of paperwork.
The processes are similar in Ecuador. There's a documentation system which allows you to check back, and there are very high quality requirements. You have to meet a lot of demands to become certified. Things are done the same way here, with a documentation system to describe the product and to regulate the foods they sell.
The brewery produces organic cola as well as beer. That's one product that David Flores has yet to see back home in Ecuador.
And that's it for this edition of Made in Germany. Thank you very much for joining us.